I'm going to put this here. Hello, everybody. Hello. Welcome to today's session for my first time home buyers. We are going to go through the first time home buying process from the lending and the loan point of view. So typically what happens when you are looking to purchase a home is that you are going to work with a realtor in order to find the house that you're looking for. And then you would work with someone like me in order to get the money for that property. So what we're going to talk about today is some of the myths with regard to being a first-time home buyer, purchasing. We are going to talk about interest rates and how they work a little bit. We're going to talk about the different fees that are, payable that you have to think about as you are purchasing a property. And I'll also mention a down payment assistance program that we have available for you if you need some down payment assistance. So let me actually do this here. I'm going to share my screen with you so that way you can follow along. Here, perfect. Okay, so this is some good stuff to know with regards to getting a loan to buy your first home. Again, my name is Cheree of Simply Funded. I am personally licensed in DC, Maryland, and Virginia. However, if you live anywhere in the country, contact me and I will make sure to, get you connected with the right person who can help you get into a home, get mortgage ready, all of that good stuff. So no matter what position you have in life, whether you are self-employed, whether you are full-time employed, some of you have a full-time job and a side hustle or a small business or something like that on the side, you are able to purchase a home even in this economy. The agenda for today is going to be a little bit about the myths that's out there versus the facts. We're going to talk about how rates work. We're going to talk about monthly payments and how those are structured, your closing costs, what to expect with regards to that. And I am going to mention a down payment assistance program that we have access to here as well. Let's start off with some of the myths out there. So there is a myth that if you have bad credit that you cannot get a mortgage, and that is actually not true. The lowest credit score you can have is a 580 in order to purchase a home. So I don't want you to think that, oh my goodness, I have bad credit. I had hiccups, I missed a couple of payments in the past or anything like that can prevent you from purchasing a home. So 580 minimum credit score is what you need in order to purchase a home. The next myth that's out there is some people still think you have to put 20% down in order to purchase a home, and that's not the case. You can get into a home for as little as 3% for some conventional loans. Or if you're a veteran, you can get in for as little as nothing down. Or if you are moving into a remote or rural area and you want to look at the USDA loans, those can be 0% down as well. So we do have some really good ranges with regards to people who may, have decent credit or great credit, but not necessarily a lot of cash. Let's talk about how you are able to get into a home. The next myth is that all of your down payment has to be cash in your bank. This is not the case. There are a couple of other ways that you're able to get your down payment money. One is from your 401k. So the federal guidelines do state that if you have money in your 401k, you can use that money in order to purchase a home without being penalized for taxes. So traditionally, if you take money out of your 401k before retirement, you end up with a tax penalty. But in this case, in order to purchase a primary home, you can use your 401k. The other thing that you're able to do is get a gift from a family member. So if you have a family member that has some additional funds and they want to give it to you as a gift, then that is possible as well. And you could definitely speak with us about that, and we'll show you exactly how to set that up. Um, some people are commission. You may say, Cheree, I'm 100% commission, or I get a lot of my income from tips, and I cannot get a loan. That is not the case. You can absolutely get a mortgage if you are 100% commission, or if you get a lot of money from tips or things like that. I will tell you, though, that you do need to claim that income on your taxes, especially if you get a lot of cash tips. You'll need to claim that. I also have somebody that I'm working with right now, and his CPA over the past couple of years has taken so much money from his taxes based on the type of business that he has that he's not eligible for a loan right now. So just be aware that if you have like a cash heavy type of job or type of business, during the time when you want to purchase a home, you will want to show income and net profit on your taxes. So just a way to think about that. Um, Another myth that's out there is I have, again, bad or imperfect credit. You can absolutely get a loan with bad or imperfect credit. You have a full-time job and a side hustle. Some of you may think, well, Cheree, the lender may not count my part-time income. That's not the case. We can count your part-time income as long as it's on your taxes. So this is again where you need to be a little strategic and make sure that you're putting that part-time income on your taxes. And it does need to be on your taxes for the past 2 years. So if you have a side hustle, if you have a side business, something like that, we do need to see stable income or increasing income over the past 2 years. So many of you now are getting ready to get your 2024 taxes done. Now is the perfect time to think strategically if you want to buy a home. Hey, Mr. CPA, I don't want to like show a lot of necessarily expenses on my taxes. Okay. So thinking strategically like that. Um, some of you may think, myth, that you're switching jobs. You may say, I'm switching jobs, Cheree. I have to wait in order to get a loan. So here is the deal with regards to switching jobs. If you were a registered nurse at one hospital before and you're moving to be a registered nurse at another hospital, that's perfectly fine. You can switch jobs and still get a loan. However, if you are a registered nurse today and you're moving to become an astronaut, that's when the lender will say, hold up a second. We don't feel comfortable about your job situation and whether you're not going to stay in this industry and in this position. So that's when they get kind of nervous. Some of you are in IT and you're looking at you're in the same job and you're going to get a promotion. Great, no problem. You can switch jobs and still get a loan. It's really switching industries and more importantly, like switching the type of job that you're doing, where you'll have a little bit of potential issues. But other than that, if you are lateral or if you're getting a promotion and it just needs to make sense, then yes, absolutely, you do not have to wait in order to get a mortgage at that point. You may say, or your children may say, I just graduated from college. I can't get a loan. That is not the case. If you, as a college graduate, don't have 2 years of work experience, that's fine. What you're able to do is give us a job offer. You have to get your first pay stub by the time the loan closes, and we'll need your college transcripts as well. But people who just graduated college, if you've got that great job offer and you want to buy a home immediately, you absolutely can get a mortgage at that point. So here are 5 things you need to know about getting your first home. The first is that your credit score does need to be above a 580. However, the better credit that you have, the better terms, loan terms you're going to be offered. So just keeping that in mind, people say, hey, Cheree, like, what's the best credit? The best credit is your credit score, right? It's what makes sense for you. And, sometimes it's not worth it to wait to increase your credit another 20 points from 680 to 700. Because by the time you do that, the prices of the houses in the areas you're looking to purchase in may go up significantly. So we can definitely have a discussion about that. Um, your cash to close is another thing you need to think about. You're going to spend about 2 to 5% of the purchase price on closing costs. And we're going to go a little bit further into this presentation. I'll break down what the closing costs are for you. You do need to make sure that there is some sort of job or income stability. So if you're thinking about it from the lender's point of view, they want to make sure that, you have a work history and that work history is expected to continue. So you need to have 2 years of job history, or if you're a recent college graduate, we're going to need to see those college transcripts and a job offer, and you have to have your first paycheck by the time the loan closes. You're going to have manageable debt, not necessarily debt free, but manageable debt. So you will need about $2 of income for every dollar of debt that you have, including the mortgage that you're about to get. So, one thing you may be worried about are your student loans. It depends on if you're paying your student loans actively, if those student loans are in deferment, but don't let your student loans be the reason why you are not at least talking to me. Let's take a look at your numbers and let's see what you are able to afford. The other thing with regards to being a first-time home buyer is just thinking about the property itself. The property can't be any kind of exotic or unusual type of property. So if you want the best options of getting a loan and a mortgage, then, getting your regular townhome or single family home, or even getting a multi-unit up to 4 units, could be a fourplex, could be a duplex, something like that is going to be a great way to go. So just kind of thinking, hey, I want to get a nice bread and butter home as a first time home buyer is going to be great for you. Let's talk a little bit about rates and how rates work. So a couple of weeks ago, I think it's actually been a month now, the Fed lowered interest rates. And a lot of people thought, oh, okay, now the interest rates for mortgages are really going to go down, which they did for a couple of weeks. However, just because the Fed lowers rates doesn't necessarily mean that the mortgage rates are going to go down, because mortgage rates are based on not only what the Fed is doing, but the bond market, inflation, the health of the economy, and a lot more. So rates change every single day. So if you were to talk to me today and ask me what my rates are, and then go and talk to another person tomorrow and ask them what their rates are, you may discover something vastly different. And that is because the rates change on a daily basis. I will say this as well. There are a lot of lenders out there. However, the supermajority of us have the same rates. So if you're talking to 8 different people about, oh my goodness, what are your rates? What are your rates? You will find that the supermajority of us are going to be able to give you the same rates. So it really is about that person, that company that can get you to the closing table on time. Because if they can't get you to the closing table on time, it doesn't matter that they have a 2% interest rate right now. If they can't get you to the closing table on time or the closing table at all, then you might lose your earnest money deposit. So just kind of thinking overall about rates as one part of the entire process and the entire decision making that you're going to do when it comes to your mortgage. The final thing that I will say is that actually, two things. Number one, most websites, if you ever go to these big websites, you'll see where they will give you like some rock bottom rate. They do that in order to get you to call them and to get you to apply. And then they will hit you with, oh no, the rate's not 2% for you. It's really, 7.5%. You're like, what? You know, that's not what you said on the website last week or a couple of days ago. So I do want to warn you about, um, trusting the information blindly on a lot of these big websites. So for example, when I quote you a range of rates, I do it only after I have your application, I reviewed your credit, I reviewed your debt, your income, things like that. And I say, okay, based on the lenders that are out there, I've shopped the lenders that we have access to. And based on the lenders that we have out there, these are the rates that I'm seeing for you. So the final thing I was going to say about rates is sometimes if you have a lower interest rate, you're going to have higher closing costs. So just be aware of that as well. Uh, you know, there are people who will give you super, super low interest rates, but then they will give you like higher closing costs. So if you are thinking, hey, I want my closing costs, the amount of money that I need to bring in order to close this loan, I want that to be smaller, then you might take, especially in this interest environment here, you might take a slightly higher interest rate and then refinance in the next 12 months. So uh, for most of you, there will not be a prepayment penalty to refinance. So, just another way of thinking about this as you are proceeding as well. So your specific interest rates are going to be based on your credit score, your debt, your income, how much down payment you're putting down, and whether or not you're going to have a 15-year loan or a 30-year loan. So this is where, again, we want to make sure that we're giving you the best information possible based on your specific circumstance. Monthly payments. So your monthly payments, and this is just more of an education thing, are based on four things. Number one is principal and interest. And most people, when they think of how much do I have to pay per month, they only think about principal and interest. However, there's more that is included in that monthly payment. The other thing that's included are real estate taxes. A lot of times, most of the time, those real estate taxes are put into escrow. So within escrow, the bank holds those funds. And then when the real estate tax bill comes due, the bank actually pays those taxes on your behalf. So another thing that's included in your monthly payment is homeowners insurance. Again, that's something that is escrowed as well. And then the final thing are your homeowners insurance or your condo fees. Actually, these are not escrowed, so I need to change the slide. I apologize for this. But when a lender is asking like how much house can you afford, if you come to me or any other lender and say, hey, how much house can I afford? We're actually going to look at all of these numbers and put that together and say the maximum amount you can afford in a monthly payment is X number of dollars, and it's based on all of these numbers. And then we'll let you know how much house you can afford to buy. Closing costs. So, how much money do you have to actually bring to the closing table? One of my mentors said that a great acronym for this is Delta. And Delta stands for your down payment, your escrow, and your escrow are your taxes and your insurance. And you'll typically need about 14 months of taxes and insurance at the closing table. You're going to put your lender fees in there. Lender fees are a part of your closing costs. So it's basically like the underwriting fees. Title fees. So your title company is going to review the title, make sure that it is clean, make sure that nobody else can lay claim to the property once you purchase it, and also give you title insurance as well, saying that yes, they did a thorough job and they made sure that the title actually is clean. Um, and then A stands for appraisal and anything else. So the appraisal you will have to pay for in advance. These days, appraisals are running anywhere from $550 to $800. Um, but you will have to have that money during the underwriting process when you're going to get your appraisal. Everything else you bring to the closing table. Well, appraisal and your earnest money deposit. Everything else you bring to the closing table. Anything else could be, we always add a couple thousand extra in there for like other incidentals. But one big thing that has come up is sometimes you may have to pay for all or a portion of your buyer's agent fees, the real estate agent that is helping you to purchase that home. And you may say, well, Cheree, then I'm not going to pay those fees. I'm going to represent myself. Okay, if you represent yourself and you do something incorrectly within the contract portion of purchasing that property, you may not have recourse. You may not be able to go back and change things. You may not know how to negotiate seller's credit and other things properly. So I would definitely encourage you not to skimp on working with a real estate agent. But there are a lot of places out there, a lot of properties you can buy where there are no buyer's agent fees. So, don't let that scare you right now. Just understand that that's part of the closing costs. So, right now you may be thinking, hey, you know what? I'm ready to talk about getting a pre-approval letter. I want to get pre-approved. I want to know how much I qualify for, things like that. In order to get pre-approved and get that pre-approval letter, you would need to complete an application. And this is whether it's our company or any other company. You would need to complete an application. Then we're going to confirm your income. And the way that we're going to do that is you're going to send us your last 2 pay stubs and your last 2 years of W-2s. If, again, you are a recent college graduate, you can send us your job offer letter and your college transcripts, and we would accept that. The other thing you would have to give us is something that shows that you have the money for closing costs. So that could either be a bank statement or a 401k statement or both. I've had people give us both based on they've had some money in 401k and some money in the bank. Okay. We're going to estimate your monthly payment. So you're going to tell me, hey, Cheree, I see these houses. They are $400,000 and I want to put 5% down. And I'm going to say, great. Now I'm able to estimate what your monthly payment is going to be. I'm going to review your credit. And really, I'm looking at your credit score. I'm also looking at the debt that you have. Remember, you need $2 of income for every dollar of debt that you have on your credit report. And then I'm going to have a 30-minute consultation with you where we're going to go over your options. I'm going to give you maybe some homework that you need to do. And I could potentially give you a pre-approval letter at that time for you and your realtor. I do like to meet with your realtor just by, phone, do a three-way with you and your realtor, just so we make sure we're all on the same page as well. And, make sure that that realtor does not have any questions of me with regards to your pre-approval. So, and then, what to expect from contract to closing. Well, so you get your pre-approval letter, you find a house, you put an offer in, and it's accepted. Now what? Okay, the first thing is you're going to send in your earnest money deposit. Sometimes your earnest money deposit goes with the realtor, sometimes it goes to the title company, sometimes it goes to the closing attorney. Your realtor is going to tell you where to send that earnest money deposit. And usually you just have a few days in order to get that in. So you want to make sure that you're compliant with that. You're going to come and talk to me, say, hey, Cheree, and your realtor will most likely let me know that your offer was accepted. We're going to hop on a call and we're going to discuss the interest rates for that day and lock in your interest rates if possible, if that's what you want to do. And I'll give you some options with regards to that at that time. Then you're going to pay for your appraisal. We'll, set up, you're going to sign your closing disclosures and you're going to pay for your appraisal. And we'll send you an invoice. You click the link and you pay for the appraisal at that time. We're going to request any additional documents that we need from you. So sometimes you may have had an additional pay period between the time we did your pre-approval and the time that the um, underwriting is happening. Well, we'll request that new pay stub from you. Or sometimes we may need letters of explanation for things. We're here to make the process as seamless as possible for you. But we may have to come to you and ask you for a few additional documents. Then title is going to confirm that the property has no title issues. There's no liens on it that are not going to be taken care of when you purchase the property, things like that. And then we're going to contact you when all of those things are done. The underwriter's done with their piece of looking at your application. The appraisal has come in, things like that. And we're going to say, hey, you are clear to close. You're clear to close the loan, basically meaning that the underwriter has done their part. They've reviewed everything and your loan has been approved and you're going to go to settlement. You're going to send your closing cost to the title company. So what's going to happen is that you'll hear from us as the lender. We'll say, hey, you need to send X number of dollars to the title company. The title company will tell you how to send that money. Sometimes that money is sent by wire. Sometimes that money is sent through a cashier's check. You'll work with the title company on that. If the title company is asking you to wire money, there's a lot of fraud that happens at this point. If the title company sends you an email with the wire instructions, call the title company and say, I want to confirm the wire instructions, right? If you get a second email saying, hey, wait, hold on a second. The wire instructions have changed. Do not believe that email. Call the title company back, say, hey, I got an email saying that the wire instructions have changed. Is this true? 100% of the time, it's not true, right? But there are people who have wired funds to the wrong place and they've lost all their money. So you want to be super vigilant and making sure you check with the title company and make sure that you are sending your funds to the right place. And then you're going to go to the closing table. You're going to go to the settlement table. You're going to close your loan at that point. So Again, my goal is to work with you to make this entire process as stress-free as possible. Also, to give you the strategy that you need in order to successfully purchase your first home. Whether you are going to house hack, whether you're going to buy a 3 or 4 unit property and live in one of the units, whether you are, just going to buy a regular single family home or a condo in order for you and your family to live. Again, my goal is as much stress-free lending as possible for you. So I will keep this up for a few minutes. You can either call or text me 571-583-4600. If you have questions, you can unmute yourself. Let me know. If anybody has any questions.
Hi, Cheree. This is Helen.
Hey, Helen.
How are you?
I'm good, thank you.
Great. Thank you for your presentation. I've been trying
Absolutely.
to get on one of your webinars. I keep missing the time, so this was excellent time to do this. So I was
Yes.
wondering, as far as do you send out I know you record your presentations. Do you
Mhm.
send out copies of those
Yes,
presentations?
I can. I've been negligent over the past couple of weeks in doing it, but they are up on YouTube as
Okay.
well.
Okay.
But yeah, but Helen, I will make sure to send you the link
Okay.
to
Great.
this. I usually rebroadcast on Tuesday,
Okay.
and that's when it gets up on YouTube. Um,
Okay, gotcha.
mhm.
All right. And then do you have on that same as far as YouTube, do you have previous webinars?
Yes.
Okay,
The
great.
previous webinars, I've got stuff that's a couple of minutes all the way to stuff that's, 30, 45 minutes. So
Okay,
a lot there. Um, and then if people are interested in investing, I also have a teachable course. It's totally free. It's called showmethemoneycourse.com.
okay,
Able to go there and find all sorts of loan programs for investing, if that's what you want to do. So,
great.
mhm.
Awesome. Okay, thank you.
You're welcome. Glad to have you today.
Absolutely. Thank you.
Anybody else? Any other questions? I'm going to see if I can
Uh,
get on
y-
Facebook here.
yeah, I do have a question.
Yes, ma'am.
Hello, my name is Etoile, and
Hi.
I'm currently a student, and
Okay.
I was kind of surprised that, as a student or as a recent graduate, you can be able to get a loan and invest in purchase a house. And I was kind of wondering, I had the same question as Helen. Do you have like more videos and things that I can educate myself on that? Because that's definitely something I want to do after graduating from school and then be able to invest
Sure.
later on. So I was just wondering if you have more information on that.
Sure. So, if you go to that showmethemoneycourse.com, that's going to be a great place for you to start. So I would suggest you look at the house hacking
Hmm.
video in order to purchase your own first home. And then there are a lot of other videos on there. And even though you're a recent graduate or soon to be a recent graduate, everything really is about credit, cash available, and whatever the property is, and it's basically a mixture of all of those things. So that really is it. So if you come to me, for example, with regards to like, hey, Cheree, here's a property I want to purchase. Can I buy it? I'll be able to tell you really quickly, like, yes, if is what I always say to people. If you
Hmm.
have X number of dollars for down payment and closing costs, because that's really what it is about.
Wow. So
Yeah.
let's say, for instance, for a house that is, this is probably inaccurate, but for something that is probably 300,000,
Mhm.
how much cash do you think someone like me or a recent graduate should have in
Okay.
order to be
Um,
qualified?
okay, so if we're taking a $300,000 house,
Hmm.
you probably could get away with 3% down. So that's about $9,000 for down payment.
Mm-hmm.
And I would probably add, I'm gonna be on the safe side, and this includes like escrow and everything else, because it does depend on like where you're buying, right?
Mm-hmm.
But you might have another 10 for, you know, everything else. And honestly, that honestly depends on where you're buying, because real estate taxes in the Metro DC area are off the chain. But I go to other places and I'm like, that's all you're paying in taxes, you know? So that really, I mean, the real estate taxes is where it really gets a little more expensive depending on where you're buying.
So what would be your recommendation for new grad to like which area would you recommend a new grad to buy if they want to invest? Like besides DC, like what would be like the ideal location based on experience?
So I'm not going to just limit this to new graduates. I'm going to limit this to first-time investors.
Okay.
The best place for first-time investors to buy is buying your own home. It's cliche, I know, but it really is buying your own home and house hacking your own home. The second place is within 50 miles of where you live, because you want to be driving distance of wherever you live. So within 50 miles, you're usually able to get there within an hour. Okay. So within Northern Virginia, there are some people who invest closer to Southern Virginia, like closer to the Richmond area, or there are some people who invest in West Virginia, or there are some people who invest in Southeast Virginia. That could take a little bit longer than an hour to get to, but I see people investing in all of those places.
Thank you.
And know the laws. Know the laws. So Maryland is not landlord friendly.
Mm.
Okay. If it also depends on the kind of investing that you're doing. So are you fixing and flipping? Are you doing long-term holds? I would not suggest anybody who does not have money do long-term holds.
Mm.
I don't. Because if anything happens with your tenant and you have to carry that mortgage, you've got to make repairs, things like that, and you don't have any money, it's not going to be pretty, right? So it depends on the kind of investing that you're doing as well. But that would be my suggestion.
Thank you so much, Cheree.
You're welcome. Anybody else have any questions? Okay. Well, I appreciate you all coming and spending some time with me on this holiday weekend and all of that. And showmethemoneycourse.com really is a great place for you to find a lot of different loan programs for a lot of different scenarios, especially if you're an investor. And most of the videos are like less than 10 minutes. So you can see a topic, listen to it, and get an idea of, okay, that's how I could fund this kind of deal.
Great. Thank you for that information.
You are welcome. all right, ladies, thank you so much. Have a blessed evening, and I will hopefully see you two pretty soon. Okay.
All right. Thank you. God bless.
Bye-bye.